All right, welcome. Today, we are going to completely demystify crypto charts. We're starting right from square one, from the very beginning, to build you a solid foundation. The goal here is for you to start understanding the story the market is actually trying to tell you. So let's just dive right in. Have you ever pulled up a trading chart and just stared at it? Felt like you were trying to read some ancient foreign language? Yeah, you are not alone. It can look incredibly intimidating. But today, our mission is to translate all of that into plain, simple English. We're going to do this by breaking it down into 6 simple building blocks. First, we'll cover what this stuff even is. Then, we'll learn the alphabet of the chart, the candlesticks. After that, we'll see how those letters form sentences, which are the trends. We'll find the key landmarks, figure out how to gauge the market's strength, and then we'll wrap up with what is absolutely the most important piece, the right mindset for your first day. Okay, first things first. Before we even think about reading a chart, we have to understand the whole philosophy behind it. Why are we even looking at these crazy lines and bars in the first place? So what is technical analysis, or TA, as you'll hear it called? Well, to put it simply, it's just a method for trying to figure out where the price might go next by studying where it's been in the past. The core idea is that every single human emotion, all the fear, all the greed, all the buying and selling, it's all baked right into that price chart. Now, this next part is absolutely critical to remember. Technical analysis is not, I repeat, not a crystal ball. It doesn't guarantee you a single thing about the future. Its entire purpose is to help you stack the probabilities in your favor so you can make decisions based on patterns and logic, not just gut feelings and emotions. Okay, let's get our hands dirty with the first practical skill. See, if a chart is like a book telling a story, then the candlesticks are its alphabet. We have to learn our letters before we can even begin to read. So every single one of these little candles tells you the story of a specific period of time. Could be 1 minute, could be 1 day, doesn't matter. And in that time, it shows you 4 key pieces of information: where the price opened, where it closed, the absolute highest point it reached, and the absolute lowest. And those little thin lines sticking out, the wicks, they just show you those price extremes. So why are some green and some red? It's actually super simple. If the price closed higher than where it opened for that period, the candle's going to be green. We call that bullish. Think buying pressure. And if it closed lower than where it opened, it's going to be red. That's bearish or selling pressure. That's it. All right, so now that we can read the individual letters, the candles, we can start to zoom out a bit and see how they form words and sentences. This is what we call identifying the market trend. The market really only moves in one of 3 ways. In an uptrend, you'll see a clear pattern of higher highs and higher lows. A downtrend is just the exact opposite, a series of lower highs and lower lows. And then sometimes you get a sideways market where the price is just kind of bouncing back and forth in a range. As a new analyst, your first job is just to look at a chart and figure out which of these 3 phases are we in right now. Now, a really key concept here is that the trend can look different depending on your perspective. Think of it like a telescope versus a magnifying glass. A bigger time frame, like say a 4-hour chart, is your telescope. It shows you the big overall trend direction. Then a smaller time frame, like a 15-minute chart, that's your magnifying glass. It lets you zoom way in on the little short-term moves happening inside that bigger trend. Okay, so we can see the direction the market is moving. Now we need to start finding the key landmarks on our map. In trading, these are known as support and resistance zones. Honestly, the easiest way to think about this is just a floor and a ceiling. Support is like a floor. It's a price level where buyers tend to show up and stop the price from falling any further. And resistance? That's your ceiling. It's a level where sellers usually take control and reject the price, pushing it back down. But how do you know if a floor or ceiling is actually important? Well, here is the #1 most important rule: you have to look for multiple touches. One time the price bounces, that could just be random. But if it bounces off the same area 2, 3, or even more times, then you know it's a valid, significant level that the market is paying attention to. So we've got our direction and we've got our key levels. But here's the thing, not all price moves are created equal. We need a way to know how much strength or conviction is really behind a move. And for that, we look at something called volume. You know those little bars you usually see at the bottom of a chart? That's volume. It tells us how much trading activity is happening. Think of it like the energy of the crowd. If the price is moving up and the volume is high, that shows strong conviction. A lot of people are participating. But if the price is drifting up on really low, weak volume, That's a huge warning sign that the move might not have the fuel to continue. And this brings us to a critical warning for anybody new to this. When the price smashes through a key ceiling or floor, we call that a breakout, it can feel really exciting. But if that breakout happens on low volume, you have to be so careful. More often than not, it's a trap designed to fool you. Always look for a big spike in volume to confirm that a breakout is for real. We've covered the basic tools. We really have. But now we get to the single most important part of your first day, and it has absolutely nothing to do with making money. It's all about your mindset. Today, your one and only goal is to analyze and observe. You are a detective, not a trader. Okay, now it's time for you to actually practice. Here's your homework. Open up any crypto chart you want. Start on the 4-hour time frame and just find the main trend. Is it up, down, or sideways? Then, draw the most obvious support and resistance zones you can find, the ones that have been tested multiple times. Finally, zoom into a 15-minute chart and just watch. Watch how the price acts when it gets to your levels and pay close attention to the volume. This is how you start to build real experience. And we'll end on this thought. Learning these concepts, what we just did, that's the easy part. The real, true challenge in trading is having the discipline to actually follow your own rules, day in and day out. Learning what to do is just step one. The real question is, can you commit to actually doing it?